Hello traders, welcome to Brain FX. So in today's video we are going to be doing a recap of the trade we took on Volatility 25 index. Okay, ensure you watch this video to the end. Trust me, you'll be glad you did. Alright, so without further ado, let's dive in. So looking at the chart before us, let's go to our daily time frame. Where are you? Let's go to our daily time frame. Coming to our daily time frame, we see that the market has been in an uptrend. Uptrend means making a series of lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and lower high, lower low. All right, so now let's go down to our 4 hours time frame. Now mostly I usually spot my zone at the 4 hours time frame. Okay, so that's my higher time frame. So let's go to the 4 hours time frame. So coming to the 4 hours time frame, so what did we see? We saw a break of structure. Okay, this is the model we are using. Let's get this. Where is this tool? Okay, where we have a break of structure. We have a break of structure, and then we have inducements, a break of structure again, and price tapping into our zone, and then it goes. So now this is the model we are looking at for. All right, if you can spot that this model is really going to make you profitable, like it's going to change your trading journey. All right, so look at how it is. So this is a model for the bullish market. So we have a break of structure to the upside. This is a break of structure. We have a break of structure. After the break of structure, let's call this break of structure. Clone this. So we have a break of structure to the upside. So after the break of structure, so we have this inducement. Okay, now before this we saw that there is another break of structure to the upside. Okay, so meaning we got this break of structure, and then we had retracement, and then another break of structure. Okay, so it created this low. Now this is a weak low. This is a weak low. This low is a weak low. Why? Because this is actually the major zone that caused this break of structure to the upside. Okay, this is this major zone, but price came in, it broke another structure, and then when it broke structure, we saw this void. Now mostly what we are going to be looking at for is that after this break of structure, there will be an imbalance here. We'll look out for an imbalance here. Okay, after the break of structure, we'll look out for an imbalance. Okay, very, very important. And then the next thing, we saw this inducement. Okay, we saw another break of structure. We saw another break of structure to the upside, and then this will act as an inducement. So price comes back, took out this previous low, tap into our zone, filling this void, this imbalance that was here, tap into our zone, and then it goes up. So this is our trading model. This is what we are looking at for. So we are going to be seeing that same pattern here in our charts. So now looking at our charts from here, we saw that price came in, and then there was a break of structure to the upside. This is the break of structure we are talking about. So there's a break of structure to the upside. So after this break of structure, we saw that there's a retracement, and then there's another break of structure here. We saw this break of structure, another break of structure to the upside, and after this break of structure, let's have this here. So that's a break of structure again. So after this break of structure, we saw that price came in, it did this consolidate a bit, it came in, it took this low. So this acted as an inducement, and then price did what? It tapped into our zone. Now also notice that after this break of structure, you know that there was a void here, an imbalance. You must look out for this imbalance always. So there's an imbalance or market inefficiency, meaning price did not trade efficiently in this zone. So for zooming, we saw that between this candle, and this candle, between this candle, and this candle, there's this void here. Okay, so that's an imbalance. So price did not trade efficiently, meaning we are anticipating in the future for price to come back to come and fill this void before it goes up. Okay, so break of structure number one. Okay, after the break of structure, we saw there's an imbalance, and then the next thing we saw another break of structure. After seeing this another break of structure, we saw that there was a bit of consolidation here. Price came in, took out this previous low. This acted as an inducement, and then price came in, tap into that hour zone, and then it goes off. So now, how would we now spot our entry, like the sniper entry? Now this is our 4 hours time frame. No, this is our 4 hours time frame. So now we can further refine this zone. Okay, so now if you come to our 1 hour time frame, coming to this zone, this is the same zone. So coming to our 1 hour time frame, so we have refined this. Now there's actually not much to refine, but this is actually that same zone in the 1 hour, nothing much to refine. Okay, so now when we waited for price to come in to tap into our zone, after price tap into our zone, the next thing we are going to be looking at for the sniper entry is going to be on the 15-minute time frame. It could be on the 15-minute time frame, on the 10-minute time frame, or on the 5-minute time frame. So price came in, tap into our zone. So the next thing we look at for, we go to our 15-minute time frame. Okay, so let's wait for it to load. So price came in, so this is our 15-minute time frame. So what did we see? We saw a break of structure. Okay, we saw price came in, tap into our zone, and then there was a break of structure to the upside. This is a break of structure. This break of structure to the upside. So price came in, tap into our zone. It did this. It broke structure. So now this is the zone that caused that break of structure. This zone right here. This zone. This other block caused this break of structure. Okay, so we waited for price. So this broke structure. So this is the break of structure. We can have it here, BOS, break of structure. So this is a point of interest. So now this becomes our POI. That's a point of interest. So after price broke structure, we waited for price to tap into that same zone before we buy. So this is where we would have put our entry, our long. So we would have put our entry here and a stop loss below this. Now not below this candle, mostly below this zone. So we are counting all, we are taking consideration all this zone. So instead of putting our stop loss below this candle, we choose to put it below this zone. Okay, and then where will be our entry, our exit point? So let's go back to 1 hour. So if we enter the trade here, this will be my exit points here. I would have exited from this point, this previous swing high. Okay, but we saw that price actually came in, it tapped into our zone, it went up, it took out this high, it's still going up, but this would have been our exit. So this would have been a clean entry, a very clean entry. Okay, so guys, go to your chart and ensure you practice until we meet again in our next video. So bye for now.